Imagine it's the year 2000 and you have 10 grand to invest. You listen to your financial advisor. You go with the classic 60-40 stock bond split. Meanwhile, your friend takes the same 10K, goes all in on Amazon. Fast forward to today. Your 60-40 portfolio, it's 40K. Your friend's Amazon stock, 7 million. Now here's the question. Are you making the same mistake today with Bitcoin and crypto? For decades we've been told, stocks for growth, bonds for safety. Real estate is the best long-term investment. Crypto, too risky. Like all my air quotes. I'm just air quoting everything. But here's the thing. That advice is outdated. Plain and simple. Over the last decade, crypto and tech stocks have outperformed everything. If you would have put just $1,000 into Bitcoin in 2013, you'd have over 600,000 today. Meanwhile, bonds have barely beat inflation, and real estate investments just keeping up with the cost of living. So what's the move? How do you build a modern portfolio that actually makes you wealthy? That's exactly what we're breaking down today. Keep watching, especially at the end, because by the end of this video, you'll know exactly how to allocate your portfolio based on your age, risk tolerance, and market conditions. And if you don't, well, you might be missing out on the biggest wealth opportunity of your life. Now, if that sounds good, smash that like, hit subscribe for new videos at least once a week, sometimes twice, and let's dive in, baby. Let's get one thing straight. All crypto isn't some speculative gamble anymore. It's the best performing asset class of the last decade, period. And there's a reason why even institutions like BlackRock and Fidelity and major banks are piling in. But let's break it down. Why should crypto be the foundation of your portfolio? Think of Bitcoin like digital gold, except instead of sitting in a vault collecting dust, it's been growing at an average annual rate of about 105% over the last decade. No stock, no bond, no real estate asset even comes close. And investing in Ethereum is like investing in the internet before anyone knew what websites even were. It powers DeFi, NFTs, smart contracts, basically the entire blockchain ecosystem. Imagine buying Apple stock before the iPhone existed. And here's the good news. Adoption is still in its early stages. The biggest players in finance are just getting started. If you had 10K to invest in 2013 and split it evenly between Bitcoin, S&P 500, and real estate, here's what you'd have today. The S&P 500, 30 grand. Real estate, 25K. Bitcoin, are you ready? Over $6 million. Now, of course, past performance doesn't guarantee future returns. But the pattern is clear. Traditional markets are slow, capped, and most just keep up with inflation. Meanwhile, investing in crypto is where real wealth is being created. Volatility is a feature, not a bug. People love to say crypto's too volatile. But here's the thing. Volatility is where the opportunity is. Amazon's stock crashed 90% during the dot-com bubble before becoming a $1 trillion company. Bitcoin has had multiple 50% plus crashes, yet it still dominates long-term returns. The best performing assets in history all started off too volatile. There's the air quotes again. So the real question is, do you want to play it safe to just keep up with inflation? Or do you want to position yourself for life-changing gains? Because if you're waiting for crypto to stabilize, you'll be buying it at 10x the price. And here's the best part. I'm about to break down exactly how much crypto should be in your portfolio based on your age and financial goals. So if you want to see optimal strategies for your 20s, 30s, 40s, and beyond, keep watching. You do not want to miss this. How to allocate your portfolio for every age. All right, so we know crypto is the highest performing asset in the last decade, but how much should we actually hold in our portfolio? The answer? It depends on your age, because the reality is if you're in your 20s, your financial goals look very different from someone in their 50s. And if you structure your portfolio the right way, you can maximize growth when you're young and stability when you're older without missing out on crypto's upside. So let's break it down. In your 20s, go big on crypto, 80%. In your 20s, you have something extremely valuable, time. This means you can afford to make bigger risks because even if crypto crashes, you have decades to recover and ride the next wave up. And historically, every major Bitcoin crash has been followed by massive new highs, going to the moon, baby. If this sounds good to you, here's my recommendation for a portfolio breakdown. Put 80% of your portfolio in blue chip crypto, Bitcoin, Ethereum, maybe even Solana and AVAX. And the remaining 20%, put it in tech stocks, but think Apple, Google, Nvidia. Avoid investing in real estate. It's too early and your focus should be on building capital. For instance, if you'd invested $1,000 a month in Bitcoin during your 20s, you'd likely be a multi-millionaire by your 40s. 30s, still heavy on crypto, 70%. By your 30s, you will have built up some capital, but you still have plenty of time for high growth investments. The key here is to start diversifying slowly while keeping crypto as your main engine for growth. Here's a portfolio breakdown. 70% of your portfolio would be in crypto, Bitcoin, Ethereum, high conviction altcoins, while the remaining 30% would be tech stocks. In your 30s, I still wouldn't be sinking money into real estate unless you have excess capital. Because at this age, you can start taking profits during bull runs and reallocating some gains into safer assets. Just keep in mind that the safer the asset, the lower the return. So it's gonna take longer for things to get somewhere. But if you wanna retire early, then maybe do start diversifying early. 40s and 50s, shift towards stability. 60 to 65% crypto. Now's the time to secure some of your gains while still keeping a strong position in crypto. My opinion is to have a portfolio be 60 to 65% in crypto. Bitcoin and Ethereum would still be dominant here. 20% in tech stocks and the remaining in real estate. Ensure you're investing in revenue generating properties. In your 40s, you can now very easily start thinking of real estate. Ensure the assets you choose to own are assets that generate cash flow, not just stocks that sit there and appreciate over time. Also know that rental properties can protect your wealth while crypto and stocks grow it. Now, if you're over 60, capital preservation mode. 25 to 50% in crypto, more in real estate. At this stage, you want less risk, more passive income, but still exposure to crypto's upside. Here's how I would structure my portfolio. I would have 25 to 50% in crypto, depending on the risk and the amount of money that we have. This will help you keep exposure, but reduce volatility. 20 to 30% in stocks, dividends, blue chip tech, and 50% or more in real estate. Invest in cash flow properties for income to cover living expenses. Now is that time to shift from growth mode to wealth preservation. At this age, real estate becomes dominant and crypto shrinks, but remains a key player for future growth. Here's the thing, most people don't build wealth because they play too safe. They ignore new opportunities and stick to these old school financial advices that barely beat inflation. If you want to get ahead, you need to structure your portfolio for maximum growth when you're young and secure it at your age. And crypto is the best vehicle to do that right now. But here's the real question. What's the best strategy for today's market condition? Because even if you know how much crypto to hold, you still need to time your entries, manage risk, and take profits the proper way. Keep sticking around because I will show you exactly how to do that. Managing risk and timing your moves in a volatile market. All right, so now you know how much crypto to hold at each stage of life. But here's the deal. It's not just what you buy, it's when you buy. Crypto is the most volatile asset class in the world, which means if you just jump in blindly, you could get wrecked for a few years. But if you understand market cycles, risk management, and the right strategies, you can maximize gains while minimizing downside. Let's break it down. Understanding market cycles, bull versus bear markets. Crypto moves in cycles, just like stocks, bonds, real estate. But the difference, crypto cycles are faster and more extreme. Bull markets. Prices surge, everyone's hyped, it's going to the moon, and your portfolio looks like it's just printing money, it looks like the Federal Reserve. Bear markets, prices crash, the media declares crypto's dead, it's a scam, all the weak hands panic sell. For example, in 2017, Bitcoin hit 20K, it crashed to 3K in 2018. You know when I bought? I actually bought it both. In 2021, Bitcoin hit 69K, then dropped to 16K in 22. You know when I bought? I bought on both. Now, we're on the next upswing, and those who bought the dip are winning and winning big. The lesson is simple. Don't FOMO in at the top and then sell at the bottom. How do you do that? Well, what I've done the dollar cost averaging strategy, or DCA strategy. Trying to time the absolute bottom or top of the market is nearly impossible. Even pros get it wrong. And that's where DCAing comes in. Instead of dumping all your cash in at once, invest a fixed amount consistently, every week, every month, however you want to do it. This smooths out volatility and prevents you from making emotional bad trades. Historically, DCAing into Bitcoin has outperformed every other investment strategy over the long term. For example, if you DCA'd $100 a month into Bitcoin over the last 5 years, you'd have churned 6K into over 30K, even without ever trying to time the market. So, if you believe in crypto's future, DCA into Bitcoin and Ethereum, especially during bear markets. And if you don't believe in Bitcoin or Ethereum, odds are you just don't fully understand it. So that's why I created my Money and Crypto Master Course. Down below, it's free. There's no catch here, okay? The only catch is I'm actually being extremely generous, and I just want to help you. So grab that course while it's free before I start charging what it's worth. Get it. You will, at the end, if you decide not to do Bitcoin or Ethereum, that's fine, but you will be fully educated on what it is, why it matters, why it's happening. So now let's get back to this video. The importance of taking profits. Now, profits, one little side note here, if you are just looking long-term, do not touch, okay? Do not touch your Bitcoin. Do not touch your Ethereum. Just put them in, set them, and forget them. If you are investing for shorter segments of time, say less than 4 years, less than 5 years, you need to pay attention here. One of the biggest mistakes crypto investors make is holding forever. Look, long-term belief in Bitcoin is amazing, but if you never take profits, you're just watching paper gains that disappear overnight. So what's the best approach? Have an exit strategy. Take 20 to 30% off the table when you hit major milestones, 1x, 2x, 3x, 5x gains, and then move those profits into cash flowing assets like real estate or dividend stocks. Always have some capital ready to buy dips in the next bear market. Let's say you just sold 10% of your Bitcoin holdings at the 2021 peak. You could have bought 3x more Bitcoin during the 22 crash. The goal isn't just to make money, it's to keep it. So here's a question you may have. What are the absolute best cryptos to hold long term? Well, in my opinion, you should know that not all crypto projects are built to last. And if you pick the wrong ones, you're throwing money into a black hole. You might as well go to Vegas because you're not doing any better. So next, I'll break down which crypto assets are actually worth holding and which ones you would avoid at all cost. The best cryptos to hold and what to avoid like the plague. So we've covered portfolio allocation, risk management, and timing the market. But none of that matters if you're holding the wrong assets, because not all crypto is created equal. And picking the wrong ones can wipe out your entire portfolio. So what's actually worth holding? Well, let's break it down. Number one, blue chip cryptos. The only assets you can truly trust long-term. If you're serious about long-term wealth, there are only a handful of cryptos that deserve a permanent spot in your portfolio. Bitcoin, the digital gold king. Bitcoin is the foundation of any crypto portfolio. It's the most decentralized, secure, and widely adopted crypto asset in the world. It has survived multiple crashes, government bans, FUD cycles, and it's still standing. Like Elton John, it's still standing stronger than ever. Over the last decade, Bitcoin has outperformed every single asset class, including stocks, real estate, and gold. If you'd put $1,000 into Bitcoin in 2013, you'd have over 1.5 million today. Next, Ethereum, the smart contract king. While Bitcoin is digital gold, Ethereum is the backbone of decentralized finance, or DeFi, NFTs, and Web3. Nearly every major crypto project, DeFi platforms, NFT marketplaces, and metaverse projects are built on Ethereum. Ethereum's switch to proof of stake, POS, has also made it more efficient, while staking rewards acts like a dividend on your investment. Other blue chip contenders. Solana, or Sol, which is a high-speed blockchain with massive adoption in DeFi and NFTs. Chainlink, or Link, it remains the most trusted Oracle network, connecting real-world data to blockchain applications. Avalanche, or AVAX. It's a scalable Ethereum competitor with growing adoption. So if you're playing the long game, stick to assets with real-world adoption and staying power. The cryptos to avoid at all costs. There's a lot of garbage in the crypto space. While some coins promise the moon, most of them end up in the crypto graveyard. Meme coins like Doge and Shiba, they're fun for speculation, but they have no fundamental value. And I know there's a lot happening with Doge, but fundamentally, it's not a good investment. And I may end up being wrong on what it does, but I'm telling you, you will do better with others. They rely entirely on hype and social media, which means when the hype dies, so's your money. For example, Shiba Inu exploded 50 million% in 2021 and then crashed by over 90%, ultimately wiping out late investors. Pump and dump altcoins. If a crypto project is shielded by influencers but has no real use case, it's probably a rug pull waiting to happen. And rug pulls mean you fall on your ass and look stupid. Here's the rule of thumb. If the only selling point is we're the next Bitcoin, run, run, run. If a crypto doesn't solve a real world problem or isn't used by anyone, it's just speculation. Here's what you should have in mind. If you wouldn't hold any coin for 5 years or more, do not buy it at all. But here's the thing, knowing is one thing, executing is another. The crypto market moves fast, really fast. And those who understand cycles and position themselves early win big. Those who hesitate, they watch from the sidelines as others get rich, baby. So the real question is this. Are you ready to make the moves that future you will thank you for? Because the next big opportunity in crypto, it's already unfolding. And if you're not paying attention, you will miss out. So drop a comment below with your #1 crypto holding, and let's see who's really ahead of the game. And let's also see how many bots are gonna just be like, hey, I have 9 keywords here, and would you help me? Ignore those comments. Drop the real ones. I'll see you on the next video, and you, my friend, keep living your life to the fullest right after you smash that like. We'll see you in the next time. Peace.